All right. Today is Monday, September 15th. Although you might be watching this Tuesday, the 16th. But hey, I'm the ghost from your past, baby. Always giving you that tingle. But anyhow, this is a recap for the stock market activities. Well, today, tomorrow, who gives a shit? And folks, I got a good one for you tonight. And greetings from the city of Las Vegas, where the weather is getting a lot more pleasant these days. 90s, that's pretty good for Vegas. A lot of you actually ask, hey Mav, how are you doing with the garden? Believe it or not, you have the spring, that's the ideal season for at least the majority of plants. But then we have another little bit of a spring season because the fall is not really fall. It's more of a second season of more peppers, tomatoes, eggplants, you name it, roses. And then of course, little by little, it begins to get cold. But right now, it's a great time to visit. The weather is great. You know, with all of this clickbaiting bullshit online of, Vegas is dead, Vegas is empty, and all of that. Yeah, we got a problem here. I'm going to explain it to you because we're bringing back In Focus videos this week. And I want to talk about this subject because we have high-grade bullshit going on online. Yeah, we got a problem, but it's not what you think. And it's not because of what you think. Oh, Vegas is charging too much. Nobody wants to come. I'm not sure what kind of planet you're living in right now, but everything costs too much. Yet you're still paying for it, so why change the policy? And how come Vegas is so empty? When you have this weekend, we got the record crowd. Over 70,000. The Allegiant Stadium for the Canelo fight. What do you think these tickets cost? On average, $300, $500. And people might have complained, oh, they're charging too much. But they paid. And you know who paid? It's the Mexicans. By the thousands, all of these Mexicans flying in to watch Canelo get his ass kicked. So you do the math. 70,000 in attendance from Mexico by $300, $500 a pop. See, here in the city of Las Vegas, we've built a stadium and Mexico paid for it. Not that Trump wall bullshit that we're still paying for right now, so maybe Trump needs to learn from the city of Las Vegas. We built a stadium and Mexico paid for it. And they watched Canelo get his ass kicked in it. Anyways, what else happened over the weekend? Oh yeah, everybody was mourning over over Charlie Kirk, right? It's so sad. We have to come together. This country needs to heal. And about a day later, we're back to watching college football. It's a weird country, man. You go from one mood to the other. And football is the best distraction. And speaking of college ball, I got all of the games right over the weekend. That's what I did over the weekend. Just sat down, watched college ball, and I was gambling all over the place. And I got it all right. All of the games. Made 3 years worth of stock market gains in one college ball weekend. The only game that I got wrong, though, oof, that's a heartbreaker. It's the Notre Dame Texas A&M game. That was brutal, to say the least. And believe it or not, I went to sister Catholic college to Notre Dame, so technically I'm still cheering for the Irish. But that was absolute brutality. I want to make a Charlie Kirk Notre Dame joke, but I think it's too soon, right? Too soon, you say? I mean, for Notre Dame, not for Charlie. I mean, even if I want to make a joke about anything these days, my jokes are still not approved. I submitted them to the State Department because in the new United States of China, before you make a joke, before you make any free speech, you have to get approved first. Otherwise, little Marco Rubio might take your passport away, strip you away from your citizenship, and send you to Congo. So we got to be careful here what we say, and I'll let you know once the state approves my jokes. But this is going to be a really important week for the stock market, and some say that it's probably the most important week of the year. And the reason is we have the most important FOMC, Federal Reserve interest rate decision. And of course, spoiler alert, Jay Powell is going to cut, even though he knows that cutting is a mistake. Because I know a lot of you say, Mav, what if Powell actually pauses? Because he wants to stick it to Trump. There's absolutely no way. They'll Charlie Kirk his ass. So he's going to cut. He's going to be a good old boy, and he's going to cut by 25 basis points. But again, you have to understand that we have stagflation. Yeah, you might be cutting because you have a slew of Fugazi jobs numbers that are coming out weak right now to deceive the Fed into cutting. And then once the cuts are in, they begin to give you better numbers. But at the same time, you have inflation still sticky and going higher. We're closing at 3% now. Probably in the next reading will be above 3%. So what happens here? What are the implications? Let's talk about it, and how about we begin with the headlines of the day? You see, JPMorgan now warning warning everybody, all of you, that the Fed rate cuts, yeah, they're going to happen. Jay's going to cut rates, but it's going to hurt stocks and bonds, meaning bond yields will go higher, and the stock market is going to begin to correct maybe 5-10% after the rate cuts. Why? Because they argue it's going to be hawkish rate cuts, recessionary rate cuts. We're cutting for the wrong reasons. Number one, that's the recessionary side. The hawkish side would be that Powell is going to give you, okay, I'm going to cut 25, but from this point on, I'm still going to go back to being data dependent. And the Trump kitchen and the BLS labor statistics not going to cook the numbers too low for too long. It's going to look bad for them. And the market right now is pricing in about 3 to 4 rate cuts this year alone. So a hawkish Powell, even though he's cutting, he's going to tame those expectations. As we tame those expectations, the market begins to correct. That's what JPMorgan is warning you about. What is the best investment right now? Easy. It is gold. I mean, look at the inflows into gold. It doesn't matter if the Fed cut, doesn't cut, recession, inflation, stagflation, dickflation, doesn't matter. Gold is going to keep going higher. Every dip is going to be bought because we're all realizing that these fiat currencies you can wipe your ass with, especially the US dollar. I mean, all of you are jerking off. Oh my God, Mav, I'm up 10% for the year in my stock market gains. Yeah, you're not up. You got to take out the 10% downside in the dollar year to date. And then you have to take out the real rate of inflation. Sake of argument, let's say you take the government number of 3%. So you have to subtract 13% out of every gain you made this year in the stock market. And then let's see if you're up or not. The stock market, when you do the math, is actually flat to down. Gold, on the other hand, is up, even if you take away 13% worth of year-to-date gains, because gold is the true hedge right now. What is gold going to do in the aftermath of the FOMC? Of course, if the dollar spikes a little bit higher, you'll see a profit-taking sell-off in gold, but the dip buyers will show up sooner than later. So but you see the inflows into the gold ETF here, GLD, exploding higher. And this is why back in Q3 of 24, I told everybody here in this channel, in my pension fund, we're going to move from stocks to GLD gold, and that was a decision that I do not regret. We have another headline for you. How about, here it is, Trump renews calls for ending quarterly reports for companies. Do you really want your money to be all in stocks? Would we have all kind of manipulation and insane valuations and a lot of risk to come? And on top of that, you got a president who wants to say no more quarterly reports. So what are we going to invest based on? Sentiment, the greater fool, the sheep mentality, fraud? I mean, if you happen to be a company with shady crypto deals like one of these Trump Fugazi stocks and cryptos that he's making, yeah, you don't want to report quarterly because you want to do fraud. You don't want to be caught early on. You're going to buy as much time as you can. So this is a bad move, but let me know, what do you think? What do you think about ending the quarterly reports and just making them twice a year? Let me know in the comments, because at the end of the day, these quarterly reports, the earnings seasons, are sort of the college football season for us traders, aka gamblers. You degenerate gamblers, you're really going to live with 2 earnings seasons instead of 4? You're not going to be able to do that. But we got another headline for you. Of course, everybody's now asking what's going to happen after Powell. Because yeah, Powell might be hawkish and he wants to be data dependent, but Powell, he's not a hawk, by the way. He's a moron. But Powell is in his way out, and the market is going to begin to also look into who's going to be the replacement. And I say so long as the replacement is good with memes, we can do memes out of him, because Jay Powell was the king of memes. And my pick, if I had to pick, I would go with too high James Bullard. See, Powell is too late. James Bullard is too high, literally. He's going to say that interest rates are too high. We got to cut them. And then the cuts will be too high, and the memes are going to be good. I cannot wait for Chairman Bullard to take over. But I don't know. Let me know in the comments section. What do you think is the best pick to replace Powell? You going with Bullard? You going with Waller? You going with who? What are the odds, by the way, so we can gamble on them? But in other Fed news, see, Trump wanted to fire Lisa Cook, Governor Cook. Now we have the court saying, yeah, you can't fire Lisa Cook. It's not China. It's the United States of America. We still got rule of law. You can't accuse somebody and fire them before we hear all of the facts. And after doing the fact finding, they realized that, nope, she actually listed her second home as a vacation home, and you can't fire her. So now a lot of folks are saying, hey, Mav, would Lisa Cook vote for a a rate hike just to get back at the president. No. I would not be betting on that. Now, another headline for you that was a market mover is this one right here. It's another version of China called, which is again bullshit because China been calling how many times this year and we still have no deal. You got Scott Bessent coming on TV and pumping, oh, I met China in Switzerland, in Madrid, in London. We're touring all over the world. You're touring at the taxpayer expense, having expensive lunches with the Chinese, but you're not getting anything done. What are you bragging about here? But they have this version that they gave us yesterday, which pumped the market higher a little bit. That we do have a trade deal agreement with China, just waiting for Trump and Xi to meet. It's going to involve TikTok being sold. China is going to sell TikTok to a U.S. buyer, be it Oracle, be it Microsoft. Of course, a lot of folks are now questioning all of this. Is this for real? Really? China is going to sell TikTok? No way. I think it's going to be sort of a corrupt deal once again, where you have Oracle, Larry Ellison, getting in and he gets a piece of TikTok and he gets some creative oversee on U.S. content, but nothing changes really. The Chinese will have access to the data, etc. It's just that Larry Ellison is going to manipulate the algorithms at the behest of Israel, of course. And they're going to call that a deal. Oh, we got TikTok deal. And that's moving the market right now. So which stocks are moving? Of course, you have Snapchat, if the assumption is that TikTok will be at least a little bit neutralized. And Larry Ellison is going to make it not cool again for the kids. Maybe Snapchat will gain some advantage, so we see Snapchat higher. Meta, for the same reason. If we have TikTok being bought, Meta goes higher. If the opposite is true and the Chinese say, hey, dog, we don't know what he's talking about. There is no deal, there is no talk, there is no TikTok. Then it's going to be a negative reaction for Meta because they have to live with their greatest competitor. Microsoft and Oracle are going to be movers too because who's going to buy TikTok? Of course, right now the odds would be Oracle, not Microsoft. So that's going to be also factored in case you want to place your bets. What's going to happen? You have these four names. But for me, I think the class of stocks that's going to win either way, whether we have a deal or no deal, is Chinese technology, FXI, Alibaba, Baidu. Just look at these names. They've been outperforming and crushing the U.S. market. And it doesn't matter because if we have a deal with China involving TikTok and whatnot, well, that's pretty good for Chinese technology because we're going to see more investing money from the U.S. flowing back to Chinese companies. And a lot of fears that some U.S. investors had about, oh, maybe the Chinese stocks will be delisted, and this is why I'm not going to buy them. All these fears will be alleviated. And that's pretty good for the FXI and the Chinese technology stocks. If there is no deal, it doesn't matter either way. These names have been outperforming the U.S. market year to date. So, deal or no deal, China technology ADR stocks benefit either way. In another piece of news, again involving China, so this is going to be a sticky issue. Here's the headline for you. China finds NVIDIA broke antitrust law and extends probe. The stock is dropping down, but it did recover at the end of the session, at least closed flat-ish. And the reason is, hey, maybe the trade deal or the talks will involve some sort of a framework between the US, NVIDIA, and China. But once again, folks, all of this is bullshit because at the end of the day, the Chinese know it's not in their advantage to be dependent on NVIDIA, number one. Number two, NVIDIA cannot be trusted by the Chinese because they got caught rigging the chips and bugging the chips at the behest of the CIA. So the trust is broken now. Number three, the Chinese are already beating NVIDIA. They're getting really close to making a chip that is equivalent or if not better than NVIDIA. Just a matter of time. So all in all, you see that NVIDIA not only facing a problem in China, and I don't think a deal with TikTok is going to fix it, by the way, but it's also facing the law of large numbers. We talked about this in the channel about a year ago. At some point, we're going to head into the law of large numbers. And all of these big beats that you see between the revenue and the projections by the analysts and the year-on-year growth, all of these massive numbers driving the stock higher will begin to shrink down. And as they begin to shrink down, at some point, they're going to get negative year on year. They're going to miss analyst expectations. Just a matter of time. And then that's going to be the catalyst for crashing the stock. And either way, it doesn't matter because a lot of the NVIDIA fanboys would say, but Mav, you've been bearish about NVIDIA. NVIDIA's still going to the highs. Here's NVIDIA for you year to date. Yeah, you're up 32%, but take away the 10% of the dollar down, take away the inflation rate. Maybe you're up about 20%, which is pretty good. But if you're just going to have paper gains and jerk off to those paper gains, sooner than later you'll be down 50%. But my pick, year-to-date BABA, up about 86%. Take out the dollar, take out inflation, still beating your ass. How about we do another headline? Tesla was a big mover in today's session because we got Reverend Musk now manipulating the stock again, buying $1 billion worth of stock to reinforce confidence in the collapsing EV maker. Now, this is once again a pump and dump scheme. What Elon is doing is flushing $1 billion down the toilet. Now, $1 billion for Elon is like a cup of latte. Then he wants to fluff up the stock higher so he can hit his bonus targets and then cash in 10 billion, 50 billion, 100 billion, meaning he's pumping to dump. And if you look at a longer dated chart of Tesla, for 5 years now, the stock been trading in a range. That's your proof that the Tesla fanboys, the culties, are some of the dumbest people you'll ever meet. The same 5 years, you can grab a stock out of a hat. And it is beating Tesla. So what's the point here of just waiting for 5 years on false promises again by Elon Musk? That, it was the robotaxis, it was the Cybertruck before that, it was the electric dildos before that, and none of these really pumped the stock higher. All of the pumps were transitory, were pumps and dumps. At the end of the day, it's either Musk or his brother Fredo or the executives are the ones dumping and making billions of dollars. And furthermore, I'm going to say that Elon Musk putting confidence in Tesla, how big of a joke is this? Because the guy is the biggest liability right now for Tesla. He will do the stock a favor, by the way, if he just gets out. But we see a new CEO, because right now the guy is going insane. I mean, you see his tweets all over the place, attacking everybody and going nuts with this crusade against trans, right? Because he's not cool with his kid becoming trans. Well, maybe if you weren't an absentee father, things would be different. But who do you think the customer of Tesla is, politically speaking? Do you think they're really going to love what Elon Musk is tweeting right now? Doesn't matter. He can buy $1 billion, $2 billion, $10 billion, $100 billion. It wouldn't matter. It's going to be a transitory pump. Until Elon Musk is out of the way, until this company begins to take things seriously, address the competition by Chinese EV makers, and focus on tangible results rather than empty promises, the stock is not going to really go anywhere in a sustainable fashion. And any pump in the stock will be an opportunity for you to exit and find a better opportunity. Speaking of, how about uranium? Nuclear as a better opportunity, because we got this headline right here. U.S. looks to boost uranium reserves for nuclear power. We talked about this theme, by the way, since the beginning of the year. The big technology companies will continue to build these giant AI data centers. We're not going to be able to stop them because we're losers. We have no balls. And as they continue to build these giant data centers, they need a lot of resources, among them energy resources. Don't forget about water, of course. So when they talk about, water depletion and all of that, well, it's the same nerds who are warning you about the environment are the ones who are depleting the water to build their stupid AI. But all of this is going to require huge energy reserves. And this is why you see nat gas going higher. Soon enough, oil, by the way, will go higher. But even coal is making a comeback. But the most reliable source of energy right now for data centers and the cleanest would be nuclear energy. So uranium makes a great play. And believe it or not, we're still getting uranium from Russia. All of that sanctions, how's that working for you? How's sticking it to Putin working out? Because we're still getting uranium from Putin. Anyways, we gave you some picks before. You can pick whatever pick you want. Doesn't matter which one it is. Of course, U.S. uranium producers and miners should be at the top of your picks, because those are going to be impacted the most as the government begins to invest more in them. But all in all, demand for nuclear energy in total will move uranium prices higher. And as uranium prices move higher, any nuclear stock will do the job, even if it is based on Canada. You have to do your homework, of course, and pick companies with good fundamentals. I would say the Cameco CCJ is perhaps at the top of the list. But I gave you another pick that I got involved in, which is DNN Denison. Again, a Canadian miner, but this is the chart that I gave you back on the 25th, that, hey, this is probably a buy. You gotta have some nuclear exposure in your portfolio, so this is the chart that we gave you. Here's your update. Since then, we moved significantly higher. So we're gonna keep this guy as exposure. Don't forget, of course, about uranium ETFs, be it miners ETFs or the commodity uranium ETFs. All of these are available options to you. But I think you got to have some exposure to this nuclear energy theme. Now, I want to expand this conversation a bit further and go over the morning briefs that I gave you last week, because we haven't covered those. We have some picks for you that are already working out. We have picks that could be beginning to work out. So maybe you want to take some notes here As we review these morning briefs, I'm going to go all the way back to last Monday, the 8th. And in a nutshell, again, you can pause this and read it for your own, but we gave you 2 picks, or 3 rather. One as a trade, really, but anyways, we gave you bullish. How about Sony? S-O-N-Y. We said that the weekly chart is forming a cup and handle pattern. I think we're going to be at 30 in no time. This is the chart that I gave you for Sony. And I've been bullish China and Japan stocks this year. You can see that Sony, the cup and handle, that we predicted that we're going to have an ABC breakout out of this cup and handle. So here's the update for you. We did the ABC breakout. We're really close to 30. Now, the way I do these picks, and it's really risk-free, folks. You buy shares of the underlying stock that I'm sharing with you, if you believe, of course, in the same thing that I'm seeing. And then you set a stop loss. I always give you the stop loss, 5%, 10%, a specific support number that is broken, then we know that the thesis is no longer valid. If the name performs as we expect, then in about 2 weeks, 4 weeks, it becomes a core holding in the Maverick portfolio. And I'm going to review with you after we do the morning briefs, we're going to review the picks that we've done. Not all of them, but at least some of them that we've done for the year. Based on similar circumstances here, I give you a name in the brief. We buy it, we set a stop loss. You see some of these stocks went up by 30, 40, 50%. But it's really important that we talk about hedging strategies because the tide could be shifting as soon as this FOMC coming out Wednesday. Anyhow, back to the morning brief, we talked about UNG, Nat Gas, and I said that I see a falling wedge pattern. I think that we're going to probably hit 15, so we're buying a at-the-money calls, that is 13 calls, with the expiration date of this week. This is the weekly chart of UNG that I gave you. Again, it goes along with the data center spending theme. It's not just uranium, it's natural gas. So we should see natural gas prices rebounding higher. But here's your update. Didn't move much since then. So what are we doing with this? We got to roll it all the way to October. Give it a little bit of time to work out, and I think it will. We go back to the morning brief from the 8th. We have a bearish chart for DoorDash. In a nutshell, this is the chart that I gave you. And I said I see topping head and shoulder pattern, and the destination at the end of the day could be a pullback all the way down to the 200 days moving average. So we're going to go with out of the money puts for the expiration date of November. We need a lot of time for this one to happen. Here's your update. DoorDash, is it still looking as a topping head and shoulder? Maybe. But the case is weakening for sure. I would still keep the trade because if it does work out, I probably want to short Dash, short, meaning exercising and have a short position in Dash, even though the company is still strong right now because it's tied to the affluent consumer spending theme. A lot of rich kids in New York City, and they're spending a lot of money ordering on DoorDash. Doesn't matter what the price is. But again, if the trade works out, we'll keep it. We're going to exercise it. But right now, what is the cut loss here when we say, okay, timing is not ideal? We probably have to try again later. I say if we have a daily close above 265, I'll come to that conclusion that, okay, this guy is probably heading back to the highs around 280, not breaking the 50 days moving average. But right now, it looks that breaking down is still a possibility, so we'll keep the trade intact since we have enough time till the expiration date. How about we visit the morning brief from the 9th? You can pause again, read it for your own, but we talked about 3 picks here. We have XPIV. This is for XPING. This is the chart that I gave you, weekly chart. And I said that if I want to invest in EVs right now, I'm going to pick the Chinese names. This one looks as a weekly cup and handle for me. Cut loss would be at 18, so I'm going to buy shares, rent shares. If it works out, it becomes a core holding in the portfolio. If it hits the stop loss, then we cut it. Here's your update. We see XPIV hitting higher. It's above 21 now, so far so good. We'll keep it as it is. Back to the brief from the 9th. We talked about NEO, and I gave you this chart right here. So NEO showing a bull flag pattern. We're probably going to see a breakout, and here's the update for you. We did break the bull flag a little bit, but soon thereafter we went back within the bull flag, and we see a breakout happening right now in NEO. So far, so good. How about we go back to the brief? We have OKTA Okta. We already own the name, the portfolio, but we want to add to that. So this is the chart that I gave you. I see a falling wedge pattern with 3 targets to hit, 95.50, then 101, then 105. And here's the update for you. Did not move much to the upside, actually pulled back a little bit. And so long as it's not breaking the falling wedge pattern, meaning it's still holding support at about 85, I think that the thesis is still valid. So we added to Okta. We'll see how that's going to work out. Let's revisit the morning brief from the 10th now. Again, you can pause, read it for your own, but we talked about Oracle selling covered covered calls, and we made a lot of money from that one. But I gave you two charts here, CRCL circle, and I said that I see a falling wedge pattern. We're probably going to break above. My strategy is I want to buy the 140 calls, expiration date 19th. It's really rolling the dice, but the technical setup looks pretty good. So we did that, and here's the update for you. So far, so good, and I think we have more gains to come perhaps in CRCL. The trade that we've done, here it is. We bought the 140 calls, expiration date September 19th. Cost us about $1.30 a piece on September 10. And just a day later, September 11, we closed the same trade for a price of $6.30. So that's a gain of $5. Not bad. Let's go back to the morning brief from the 10th. We also gave you a bearish setup for PayPal. So this is the chart that I gave you. I see a bear flag pattern and the possibility of PayPal breaking down all the way to 65, if not below. Here's the update. Yes, we got the breakdown. Now holding. Maybe there's another leg down coming. So the trade that we've done is the 165-160 put debit spread. The expiration date is October 17th. We paid about $1.15 on those, and right now it's trading pretty much flat, so there is no update on it, but I think it's going to work out by the expiration date. Let's go to the morning brief from the 11th now. Again, you can pause it, read for your own, but we gave you four charts. SATS, GOOGL Google, ORCL Oracle, and GLW for Corning. All of these charts have elevated RSIs. And I said that we're going to begin to sell call credit spreads on them. So let's give you the updates here. This is the chart for EchoStar, the ticker SATS. This is the chart that I gave you when I wrote the morning brief, that we should be selling call credit spreads on it. Here's the update. Since that point, we went down, so the call credit spreads working out beautifully. Here's GOOGL Google daily chart. This is the one that I gave you. Here's the update. We went a bit higher. And the trade that I entered today for Google is this one right here. The 250-260 call credit spread. So you're selling the 250, you're buying the 260 for the expiration date of the 17th of October. We got a credit of about $4. I think it's going to work out. Then we look at ORCL. This is how the chart looked like when I gave you the morning brief. And we suggested that we sell covered calls or call credit spreads on it. And here's the update. So far, so good. Since then, Oracle pulled back. So the credit spreads paid out handsomely. I shared my trade with you in the stream for the Top Guns. I shared the trade, the call credit spread for Oracle in the stream, and that one worked out. We could do another one this week again. Then you have GLW Corning. This is how the daily chart looked like when I wrote the morning brief. Here's the update for you. Went a little bit higher, but I think it's ready to go down and pull back. So today I gave you a trade right here of the AD reverse calendar spread. So we bought September 19, we sold October 17th. For a credit of $1.58 a piece, betting pretty much the GLW is not going to trade above 80 by October 17th, or at least it's going to pull back between now and then and trade below 80 so we can collect some credit out of this trade. How about the morning brief from Friday the 12th? The only chart that I gave you is for WBD, and basically I said that I'm going to be buying shares, then selling covered calls and puts at the same time. And the idea here is sell covered calls. If it pops significantly higher, you can exit at a profit. If it drops down, you get to buy more of it. And since we bought WBD, it went higher by about 10%, 11%. So if you're satisfied with the profits, if this is just a trade for you, you book it right away. If you sold the 19 calls and you got called away, you sell it at 19. If you sold the 20, you're probably going to hit that this week. I think we might see a pullback first before we head back to 20. But so far, so good. And lastly, how about we do the morning brief from today, September 15th? Again, you can pause, read it for your own, but we talked about perhaps the FOMC causing a pullback in the Russell 2000. So we're going to buy TZA calls for this week. That's the inverse for the Russell 2000. But we talked about Tesla, and here's the trade that I gave you. It's a combination of one bearish, one bullish trade as a hedge. So the main trade is you sell Tesla 450 calls, you buy the 430 in what we call a bear call spread or a credit spread. The expiration date the 17th. We got a credit of about $6.70 a piece. What if Tesla goes higher though? At least for a few more days. That's a possibility. So to hedge against this trade right here, we bought TSLL. This is the levered index for Tesla. And we bought the 20 calls. The reason why, by the way, we bought TSLL as a hedge when we bought the naked calls, not Tesla, TSLA, because the options are cheaper here. So we got September 26th expiration date, and it cost us about $1 at 25 cents a piece. That way, if it goes up for a few more days, your TSLA will appreciate in value, and then when it's ready to go down, you collect the premium from the credit spread. This is how Tesla looked like at the end of the session, so it looks like a topping candle, at least for now in the short run. It's outside of the upper Bollinger Bands, so the trade so far, so good. Now, we want to expand a little bit because a lot of you are saying about the renting. How do you rent shares and how do you add them to the portfolio? I'm confused, Mav. A lot of questions about that. So let's revisit the picks, at least some of them that we've done this year, and perhaps discuss some hedging strategies in a new segment we call Hot Picks. We go back to the 14th of February. We gave you a morning brief and we discussed the China casino, the Macau casino theme. And we bought Wynn, MLCO, and Las Vegas Sands at the same day. And just take an example here. MLCO, since then, it went as high as 67%. You want to lock some of these gains, right? Before we get maybe a negative reaction by the FOMC. So we're going to discuss that when we end this segment right here. How about we go to May 2nd, and we said that we added shares of Baidu today, and we added more to it since then, and since that buy, Baidu went as high as 30%. Once again, we want to lock some of these gains. On May 12th, we also added names like KMI, GNK, KNX, AutoNation, AN, Movado, MOV. We got rid of some of these names shortly thereafter, KNX. We got rid of course, KMI later on. But the three names that we kept, let's look at these here. GNK, AN, MOV. So J&K, since we bought it up about to the highs above 31%, again, we want to lock in some of these gains. There's no point of having paper gains if we don't lock them. AN AutoNation, since we bought it up about all the way to the highs by about 21%. And MOV Movado, since we bought it up about a little over 22%. We gave you another pick on June 24th, which is STNG. We added to the oil tankers. We gave you the reason why in the video for that date. And since we bought that stock, it's up to the highs by a little over 52%. Once again, we'd love to lock some of these gains. On July 3rd, we gave you another pick, HCC for coal, Warrior Coal. And I said it's going to hit the 55 a share. Since then, we got to 55 and then some. Since the buy all the way to the high, the stock went by about 30%. I think it's going to head back to the high again. On July 8th, we gave you some Chinese picks here in HTHT and TCOM. Let's give you an update on those. Since we bought, for example, TCOM performed better than HTHT and all the way to the highs. Since we bought it, it went up by about 24%. If we go back to the morning brief from July 18, we gave you a pick for JetBlue and DNN, by the way, which is up big since then. But JetBlue, since we bought it at that point, it went as high as 30%, but now it's pulling back, hence the importance of locking in your profits. We gave you another pick on the morning brief of July 23rd, SNDX. Again, we're going to rent it. If it works out, we keep it. If it breaks the stop loss, then we get rid of it. This one worked out way better than we expected. It went higher by more than 65%. Since we bought it, so we got rid of it recently. Now, that's another method of locking your gains, by the way, is just booking your profits. If you're not worried about taxation, maybe the best move is to just sell and book your profits. On the morning brief of August 7, we gave you a pick that is INTC Intel, and I said that we're going to buy because even though we had bad news that day, the Trump administration is going to pump this stock higher. And since then, INTC all the way to the highs went up by about 35%. On the 11th of August, we gave you some picks here. Two of them became core holdings of the portfolio, USAR, that's for magnets, and then ALB for lithium. But the pick that overperformed was TKO. As you can see, since we bought the name, it went up by about 31%. Again, we'd love to lock in some gains before any market correction. August 19th, the morning brief, I gave you a pick of ZGN for Zinia. Since then, the name is up about 17% plus. So again, you'll see this case in many of your portfolios because since Liberation Day, the market been easy. So you have to be a real moron to lose money in the market and have a bad pick. So a lot of you have holdings that are up 10%, 20%, 30%. If we expect that we have a seasonal pullback, a correction that's going to begin from the FOMC all the way till October, how do we hedge against that? Here's my rule. If you have a position that you're up more than 10% in, then you have a lot of cushion. So all we need to have here is a limit sell order. And you pick whatever price you like to exit at. So If you're up, for example, let's say 35%, and you're willing to risk maybe 5%, but you want to lock in 30% worth of gains, see which number corresponds in the chart that you're investing in and have your limit sell order at that number. That way, if the stock goes down in a correction, you're out and you're locking in the gains that you have. Now, if you have a stock with gains less than 10%, you're more jeopardy. So here, a limit sell order might not serve you because you could see the stock down, especially if it is high beta. You can see it down 7, 8, 10% or more overnight. And limit sell order is not going to serve you. So here in this case, you want to spend money on insurance. And the best insurance right now, the cheapest one would be at the money puts, meaning at the current price. And the expiration date would be the 19th. That's going to give you coverage all the way till the end of the week. And then, of course, you can expand on it if you choose to. You can exit your holding if you choose to. The last question would be, what if I have tax obligations? I haven't been holding the name for over a year. I don't want to pay capital gains taxes. Listen, capital gains need to be reformed because I'm not Jeff Bezos or Bill Gates. Sure, if these guys are dumping $2 billion worth of shares, charge them the capital gains. But why do I get charged capital gains taxes for the little pennies that I'm making? So that has to be reformed by the administration. But until then, if you're worried about capital gains taxes, here's what I would say. Number one, yes, you might be paying 35% in capital gains taxes, but would it be really worth it not to sell at a profit and wait till you hit the 1 year mark? And at that point, maybe your holding will be down. You lose a lot of gains, maybe. So you have to think about that. Number two, if you still have worries about capital gains taxes, then your only option is to buy at the money or slightly out of the money puts at the price you want to exit at. And the expiration date has to be the 1 year mark. So a touch above the 1 year mark since you bought the stock. That way, if you exercise that put option and say your stock is down and the strike is in the money and you exercise that put option, it's going to be counted as you sold your stock after the 1 year mark, and you're not going to have to face capital gains taxes. The only problem is that these longer dated puts will cost you a lot of money. So I leave the decision for you, but the point being here, you saw the VIX higher today along with the market. And that's a message by the market to say, hey, we have some hedging here. We have some of the pros saying that we might see sell the news phenomenon after the FOMC all the way to October. So the point being is, you gotta hedge. You gotta lock in some of these gains that you got. But folks, let's just wrap it up right here. Before we go, just a reminder, if you happen to be a member of the show, we put out the market information coverage in a separate video. I'm gonna link it in the top comment of this video just so you can have a reference to it. And if you're not a member of the show, what are you waiting for? Anyhow, folks, this is all I got for you for now. Thank you for listening. Thank you for watching. I appreciate and I love all of you. I will be talking to you again tomorrow. Good night.
You want